Goldman Sachs has reduced the likelihood of the United States entering a recession in the next year, lowering its estimates by 5 percentage points to 15%. This adjustment follows the latest employment report that showed better than expected data. Goldman Sachs chief U.S. economist Jan Heitzo has noted that the September employment data has reset the labor market narrative and alleviated concerns about a rapid weakening in labor demand. The firm continues to project a series of rate cuts, anticipating a terminal rate between 3.25% and 3.5% by June 2025. Moving to Europe, data from Eurostat has revealed that the Eurozone retail sales increased by 0.2% in August, marking the first monthly rise in 3 months. This growth follows a flat performance in July and aligns with market expectations. On a year-on-year basis, retail sales rebounded by 0.8%, recovering from a 0.1% decline in July. In the EU27, retail sales volume increased by 0.3% month-on-month and 1% compared to the same period last year. French Central Bank Chief François Villeroy de Galhau expects the European Central Bank to cut interest rates on October 17th due to weak economic growth, raising concerns that inflation may fall below the 2% target. Villeroy noted that possibilities of a rate cut this month as inflationary pressures ease faster than expected. Villeroy also forecasted additional cuts in 2024, predicting that the ECB would reach a neutral rate, neither stimulating nor slowing growth by 2025, provided inflation stabilizes at 2%. In the energy sector, Chevron announced that it is selling its assets in the Athabasca oil sands and Duvaney shale to Canadian Natural Resources for $6.5 billion as part of its divestiture strategy. This all-cash transaction, expected to close in the fourth quarter, aligns with Chevron's plan to divest $10 billion to $15 billion in assets by 2028. The assets located in Alberta contributed to 84,000 barrels of oil equivalent per day to Chevron's production in 2023. We move to commodities, where China's central bank has stated that its gold reserve sat at 72.8 million fine troy ounces at the end of September, with their value increasing to $191.47 billion from $182.98 billion at the end of August. China's central bank did not purchase gold for its reserves for the 5th consecutive month in September, primarily due to rising gold prices. The People's Bank of China was the world's largest official buyer in 2023, but the bank has now paused purchases after 18 consecutive months. Gold prices edged up on Monday after escalations in the Middle East pushed investors to safe haven assets, while traders awaited the inflation data this week for further clues on the Federal Reserve's rate cut path. Spot gold was up 0.2% at $2,658.07 per ounce, and the U.S. gold futures edged up about 0.4% at $2,677.90 per ounce. Oil prices extended gains on Monday, with Brent nearing $80 to build on last week's steepest weekly jump since early 2023. The rise was driven by fears of a wider Middle East conflict and potential disruption to exports from the major oil-producing region. Brent crude futures rose 1.4% to $79.14 a barrel, while West Texas Intermediate crude futures was up 1.55% at $75.53. In the markets, the benchmark 10-year U.S. Treasury yield climbed to 4% on Monday following robust labor market data that dispelled recession concerns, prompting a reduction in rate cut expectations. U.S. markets are now focused on Thursday's CPI report, but Friday's job data, which revealed the highest job growth in 6 months, continues to drive the market tone. Treasury yields rose while U.S. equity initially gained, supported by strong jobs reports. The U.S. dollar also strengthened, especially against the yen, as markets recalibrated around reduced recession risks.